Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Thursday, August 5th. Great to have you here making us part of your day. I'm your host, Jesse Allen. Thanks for joining us. MarketTalkAg.com. That's our home on the web. You can see that on the video screen, on the ticker below. Find our social media there, all our streaming sources, our radio affiliates, ag news, market news, everything. Your one-stop shop is MarketTalkAg.com, whether you're on your laptop or on your mobile device. Take us with you wherever, MarketTalkAg.com. Good solid day today in the grains. A little bit to talk about with hogs and cattle here. It was a kind of a disappointing day. Let's break it all down and let's bring in our good friend John Heinberg with Total Farm Marketing. John, good afternoon. And, overall, not a bad day today. Quart of beans. We had a little fade late, it seemed, but still a fairly solid day to talk about here on this Thursday.
Yeah, it was a solid day. At least got some news for once. I mean, this market's been looking for some demand news, and we saw export sales on corn this morning kind of beat the expectations on those new crop sales, a little bit under the radar because we didn't have a lot of them, overly reported. Then we got that sale on the soybean side today. Unknown destinations picking up 300,000 metric ton. Typically, that's probably China. I did see some chatter through the internet or in the in the Twitter world that China was picking those beans up for October delivery from the Gulf, and then so prices must be getting a little bit more comparable that they're going to step into the market. Now, it would have been nice to see the beans hold those gains. And, we had that technical breakdown yesterday below that 100-day moving average, and which is around 1335, 36 area. We poked over that for a little bit today, then we fell back under. So, it's one of those days you get some good news and you really don't get that movement. It kind of still makes you a little bit cautious, the bean market going forward.
Well, you talk about the demand side. I saw another rumor as well, unconfirmed, but maybe Brazil could be seeking some U.S. corn to supplement domestic needs with some Argentine shipping problems. I mean, you look at things like that. You look at China stepping back in to buy soybeans here today. So obviously demand is there, and we're hopefully maybe getting some more demand back into this market after a little bit of a quiet period, so to speak.
Yeah, and that's really been the issue in terms of price. I mean, obviously we've been dealing with the weather, and that became the same old story. Weather models would change on a daily basis. This one's drier, that one's wetter, this one's drier, and then the market was just not going anywhere. It needed something a little more concrete to it, and the demand news is something that's concrete. Now, we haven't really seen anything here in quite a while. We've been watching that Brazil situation. We've been kind of calculating maybe about 300 million bushels of extra demand that's going to be floating out there on the global scale that's going to be lost to from Brazil. So seeing some of that show up here was definitely what we're going to count on. We got the USDA numbers coming out next week, so we'll see if the USDA makes any changes on the demand side of the table for next year in terms of those export sales. So that'll be something that's going to be closely watched by this market and how it kind of figures out where we go. So, with that, 550 seems to be a magnet to corn at this time frame. And like I said, beans technically were a little bit broken here. We're so trying to see if we can get back up above that 100-day and turn this thing back a little higher. The overlaying factor, I think, for beans is what we're watching for the weather the next couple of days here and see what we get with this front coming through, because it sounds like after that, things are going to heat back up again and dry back out.
Well, looking as well, something I've been watching this week is that soybean basis has been strengthening. It looks like along the river markets and really across much of the Midwest, basis has been strong. We've been seeing some gains for corn. So, I mean, looking at this time frame, I wonder how much that's going to play into maybe some decision making if we continue to have some strong basis here throughout the Corn Belt.
That's a factor we got to keep an eye on. And actually, the strength of the corn market today was that September contract picking up 10 cents, gapping out a little bit over that December futures. Those two are running parallel for a few days here, or at least within a penny or so of each other. So maybe we're getting a little bit of bid there that kind of just shows us the tight supply picture that's in front of us. Maybe that's a sign that, we're trying to ship this corn out. We need that corn to be moving to those ports yet. We still got 1 month left in the marketing year. We got about 6 million tons of corn still on the books that needs to get shipped out. Estimations this week are about 1.4, so that would be pretty close to what we need. We need about 1.55 million, 1,000 million metric tons, a week to meet that 6 million number that we got set up for the marketing year. So, that might be a sign that, hey, we want to get this corn on the boat. We want to get it out of here. You see a little strength in that front month, trying to pull some more supplies out of what's really a tight supply picture here in the countryside.
Well, looking as well here, we obviously have USDA WASDE coming up here next Thursday, and looking at what is expected with that report and some of the different private data sets that are starting to come out. We're going to have more crop tours and everything else. We're looking at that flood of information and data into these markets in regards to the size of our crop. And it's really starting to be an interesting time. You factor all that in with the weather situation, and it just feels like that there's going to be a lot of things to talk about here and a lot of things to watch in the next couple of weeks, John.
Very much so. I mean, obviously, we're starting to hear some of the private analyst numbers come out. StoneX came out with their numbers a couple nights ago for corn and brought that number down to 176.9, I believe it was. I saw the Allendale number today, kind of in that same window. And you got some groups that are still keeping things on the heavier side. So we're going to get a range of numbers going into that report next week. Now we'll see what the USDA does. Again, this numbers are set off of producer surveys. Sometimes that can be a little bit elevated. I'm still kind of cautious here just with the calendar and where we are overall. If the supply picture looks like we've got enough to get through, we'll probably see some technical selling and go ahead and challenge those lows that I've been kind of eyeballing here for the last basically month. But, it's kind of encouraging, though, today to see that we got these price levels. Seems like the buyers kind of step back into the market. You got those export sales that kind of say, hey, maybe things aren't overpriced here. So it's going to be kind of interesting to see how those numbers shake out. Then right after that, Pro Farmer kicks off their tour. I think starts on the 17th of August. So we'll start getting out in the fields and getting some ideas what's coming together. And then with this weather forecast, harvest is not going to be far away. That's going to dry this crop down pretty quickly, which in the longer term may affect some of the quality side in terms of some test weight.
Now, one has to wonder here as we start to get some of these estimates, and say USDA comes in Thursday with a very bullish report or a very bearish report. I have to wonder how much we could move either one way or the other. If we have a lot of upside potential here, if it's a very bullish report, or can we collapse if it's a very bearish report? And to me, it just seems like the vibe the last couple of reports is that, we might have a big swing initially, and then we kind of contract back to these ranges we've been in. Corn, that's 550 range, beans, trying to get through the $14 mark and testing it and falling back a little bit. It just seems to me like, we have that day or so, and then we just go right back to where we've been, John.
Exactly. And, we get some anticipation going into the numbers, and then we kind of get a bit of a letdown. Most of the reports we've been getting this summer turned into some selling events. So I'm kind of watching what happens next week. Obviously, we got to get through tomorrow and get into the weekend. That was probably some of the reason we faded today, is just the fact that there's not a lot of players in the market. Had a nice little gain. Let's pocket some wins, move out, and call it a week. So we saw things kind of fade again today towards the end of the day. So we'll see what happens next week. If we're strong into that report, I'll probably go into it a little bit cautious. It's still a seasonal window where prices can go lower. And I'm not sure if we're going to call our low for the year in at the end of July or the middle of July, when we had that spike down there, right after the 4th of July. To me, it feels like we get those numbers out. If there's nothing there that's surprising or really making this market want to take off and go higher, it wouldn't shock me. We just say, hey, we're in a good spot for a while, and prices just bleed lower and go ahead and test that 460 level, which is what I've been eyeballing, which is back to a retest of that March 31st low when we got those acres numbers back then on the prospective plannings report. Same thing for beans, 1180 still an area I'm kind of targeting if things do want to roll over. I know with the tight supplies for both of them, that would turn into a great opportunity to get some ownership over any sales. But I'm still looking at put strategies because the floor is extremely cheap here with the volatility being as low as it is.
John, let's flip over to livestock and the hog market today under a lot of pressure. We've seen some decent strength here all week in cattle and hogs, and then we flip this hog market over today. October limit lower, looking at cutouts and concern there over ongoing demand. And it seems like maybe some traders wanting to sell but unable to get out here today. What are you seeing overall in this hog market, especially as we look out to October, December, and beyond with those contracts?
The demand side of the equation is going to be the big question mark going forward. Where is China at in terms of their supplies? Do we have some concerns, obviously, with the African swine fever in the Dominican Republic? What does that do to the market in general? But today, here we had export sales come out today, and they're actually pretty strong. China was back in the market, and we go limit down. So it was kind of surprising to see that. I really think right now we're looking at what's happening with the retail sector. We saw carcasses really push higher last week for hogs, started the week strong on Monday, and then just rolled over and basically have died the last couple of days. Maybe we're getting to a value point down here at 87 on October that, we'll maybe start finding a little bit of bottom picking. We'll have expanded limits tomorrow, so that's going to be cautious because the technical side on those hog charts looks pretty ugly after today's action, that we got some room for this to fall. But seasonality for both cattle and hogs in terms of that retail side, we've been buying for the Labor Day holiday. We seem to be getting through that window. And that's some of the reason we saw the weakness in the cattle market as well today. Even though the retail side continues to stay strong, it feels like the cash market just kind of plateaued after what could have been a promising start to the week.
Very, very true. On the cattle side, on the opposite end, where export sales were pretty weak today, and yet the cattle market fared better than hogs. I mean, cattle were down, but still it wasn't as bad as it maybe could have been. What do you make of this cattle market right now, John?
We saw a good move to start the week. We got back up to the top of the trend line here that October, pushing into that 129 area. Now August is probably fairly priced to cash from at least what we're hearing. 122, 23 seems to be catching the majority of the trade again this week. So that's probably put a little bit of a lid on. I think this market was anticipating maybe we could see cash push higher, especially with that stronger retail level that's been going on this entire week as well as last week. But when cash market basically kind of settled 1 to 2 higher, and today the bids seemed to soften up a little bit, it was probably just a signal that, hey, we're done for the week, and it was a good time to take some profits off. Plus, then you just saw that risk-off trade in the hog market. It spilled over into the cattle complex. We're still really counting on a lot of demand in this cattle complex overall. And again, watching export sales be a little cautious today. Now retail values have really surged here. How's that going to affect the demand side of the equation, and do prices need to come back down again? Realistically, we're still probably looking at least in that August and October contract, sideways trade, seeing, bounce into the range as we kind of continue to watch the cattle market just get flattened out with the way the packers are handling the live animals out there in terms of the cash bids. They just, killing that 120,000 head a day or just a little bit under just seems to be kind of smoothing that pile out and extending the time, which is just going to keep this market in check.
I think one thing I'm watching as well on the cattle side, I saw some video here earlier this week of, producers, a long line, a couple miles long, going to the sale barn, going to sell cattle because they're out of hay, they're out of stuff to feed these animals, and I'm wondering what the longer term impact of something like that's going to be on the cattle market as we're watching the drought in the West and in parts of the plains, and just how much that could affect beef and demand and everything moving forward, John.
Yeah, I'm in agreement with you there. Obviously, we've watched cow slaughter really pick up. It's kind of back to the 2011 levels in terms of dealing with the drought, dealing with the feed issues. And these cattle are moving. Some are going just place to place, but some are just moving to out of the system. I still love the long-term picture here. We did see April break through the 140 level this week. Actually traded there today on the highs before we fell back about a buck off that high. There's still some opportunities out there. And, as a producer, there's good value. Historically, we're starting to be at a point where you can lock some things in pretty well. Again, I'd use put strategies to keep the top side open, but just kind of know where your margins are. And if you're somebody that wants to get along the longer side of the market, watch for a pullback going into the fall. And it's a great opportunity to own some calls out there. Beyond the tighter cattle picture we got coming in front of us, we're going to be looking at bringing some more slaughter capacity on. So we could have a tighter cattle supply with also more competition in the cash market to fill some of these new packing plant that's coming on board in maybe Nebraska, as well as the change in the Tama plant and there in Iowa. So it'll be interesting to see how that all plays out. So it actually could be setting up a pretty good picture for supply of cattle versus the demand on the cash side for the spring and the summer.
John, always like to get a dairy market update when we talk, if we can fit it in. What are you seeing in the dairy market right now?
Oh yeah, nice little snapback today. Maybe the cheese trade finally found some floor on the bottom side. That was what was a little bit disappointing, has been how quickly we've seen that barrel price just kind of roll over here in the last few days. That just tells us we got a lot of supply. It's really a logistics issue right now as much as it is a production issue, and products not moving. Now with that, we got a good pop up in prices today, possibly being led a little bit by the price move in butter, as well as just some bottom picking here as we're down close to the $16 level before we rally 30 cents higher today. So maybe we just finally hit a point where milk is cheap and we can get some lift back in these September, October contracts. But anytime we start pushing back up into those upper 17s, I'm going to be pretty defensive until I start seeing some of those reports coming out saying milk production is coming down. Our cattle, like we're seeing in the beef operations, are moving out of the system.
John, as well, looking at the outside markets, stock market has been testing these record highs. We've kind of been, go over that 35,000 level in the Dow and we're just kind of bouncing off of it here a little bit. Crude oil up today a little bit. What are you seeing on the outside markets that's affecting commodities?
I don't like that crude oil action those last couple of days. Obviously, we saw a bit of a stocks build on the Energy Information Association report that caused that basically, 2 to 3% sell off yesterday. Feels like September wants to go back and re-challenge the low that we just put back in here around the 68, 67 level here just a week or so ago. That weighed on the grain markets, especially corn and the carryover there, as well as what's happening in the soybean oil market. So, beyond obviously where we are in terms of supply, demand, and crude oil, what's happening with the Delta variants and COVID, as much as we don't want to bring those things in, the market still is aware that they're there. And if that slows down some of the crude oil demand, and that can keep some pressure on prices, supplies build. So there's still that black swan. I don't want to call it really that, because at this stage I think the market knows how to handle it versus where we were, a year ago at this time. It's just going to take some time to kind of work through things and just see where we're going to be. So that crude oil market is going to be something we got to keep a close eye on in terms of how it ripples through the rest of the commodity sector.
John, great advice as always. Any final thoughts you have for us here today on Market Talk?
We didn't touch on the wheat market when we were talking about grains today, so that's something to keep an eye on. That was a pretty disappointing day in wheat yesterday. I actually put some negative signals on that KC and that Chicago wheat charts. There we might be just gotten a little too far too fast, and it might be time to take some profit off, especially looking at some of those spreads that we're seeing between wheat and corn and wheat and the spring wheat contracts. So I'm a little cautious there, and I was talking to producers today about July of 22 with some great opportunities to start thinking about a floor for next year's wheat crop.
A lot of things to consider, and I know if folks need some advice, they can reach out to you and the team there at Total Farm Marketing to get some great advice. It's just as simple as a phone call or checking out the website, isn't it?
Yeah, feel free to give me a call, 800-334-9779, or shoot me an email at johnh@totalfarmmarketing.com. And again, don't forget about that website of ours, totalfarmmarketing.com. We also have an app that goes with that, it has market prices, weather information, links to our webinars, a lot of great information available to producers.
John, appreciate the time as always. Have a great weekend. We'll talk to you next week, and we'll have plenty to talk about with that USDA WASDE report. Thanks so much.
Thanks, Jesse. Have a great week, everybody.
John Heinberg with Total Farm Marketing joining us today here on Market Talk. Find us online, markettalkag.com. This has been the Thursday, August 5th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.